Welcome to the deep dive. Today, we're jumping into a really packed week for blockchain and crypto news. This covers roughly late April to early May 2025.
That's right.
We've looked through about 10 key stories, and, a theme seems to be emerging. Digital assets are getting more mature, more mainstream, but there is still, well, bumps in the road.
That sums it up nicely. We're seeing some long-standing ideas getting stronger, some pretty big regulatory moves, and just that constant push for new stuff. It paints a picture of a sector that's, let's say, growing up but still has hurdles.
Okay, let's dig in. First up, Bitcoin. This whole digital gold concept, the numbers are kind of staggering, right? A 700-fold increase in value over 10 years.
Yeah.
That really makes you look differently at traditional things like the S&P 500, the big U.S. companies index. It feels like this isn't just talk anymore.
Absolutely. And it's not just hype driving it now. Those Bitcoin ETFs, approved about, 15 months ago, they were a total game changer.
Right.
Made it way easier for the big institutional money to come in. And when you see names like EY or Capriel Investments getting more comfortable with Bitcoin, it shows, a real shift among the traditional finance crowd.
So like actual gold, but for the digital world.
Yeah.
A safe place to park value.
Exactly. The idea is it's scarce, holds value, maybe hedges against inflation, economic wobbles. Bitcoin kind of aims for that same role digitally.
And it's not just price. Bitcoin's market dominance, its share of the whole crypto market, hit 64%. That's the highest since 2021. Does that mean investors are maybe choosing Bitcoin over other cryptos right now, like playing it safer?
That's exactly what it looks like, a sort of flight to perceived safety within crypto itself. It suggests maybe a bit of consolidation, maybe investors are a little more risk-averse at the moment.
Okay.
So while there's still cool stuff happening with other coins, the big money, institutional and maybe larger retail, seems to be sticking with the big one, Bitcoin.
Right.
Which could, slow down growth for newer, maybe riskier projects for a bit.
So, for you listening, what does this growing institutional nod and market focus tell us about Bitcoin's future? Is it becoming a stable part of the wider financial picture?
It really points towards that, doesn't it? A maturing role, potentially as that long-term store of value.
Okay, let's shift gears geographically. MoonPay, they do crypto payments. They're setting up their main U.S. office in New York City. Soho, actually.
Yeah, that's interesting.
Because New York, for ages, had this reputation, right? The BitLicense regulations made it super tough for crypto companies.
Oh, definitely. Super stringent. A lot of firms just stayed away. So MoonPay deciding to plant a flag in Soho, that's a real signal.
What changed?
It seems like the regulatory climate there is evolving, maybe softening a bit. Plus, you've got public figures like Mayor Eric Adams showing support. Makes the city look, more welcoming.
Finding that balance between rules and innovation, perhaps.
Seems like they're trying, yeah.
And it's not just MoonPay. Apparently over 130 crypto outfits, including giants like Coinbase and Gemini, are growing their presence in NYC. So a major world financial center is really opening its doors to crypto now. What could that mean for crypto adoption across the U.S.?
Well, thinking bigger picture, if New York eases up and embraces crypto more, that could definitely have a ripple effect.
Like a domino effect.
Could be. It might signal to other states, other regulators that, hey, maybe there's a way to work with this. It could really help push crypto further into the mainstream financial system in the U.S., pave the way for more growth.
Okay, let's hop over to Dubai now. They seem really serious about becoming a global crypto capital.
They really do.
The Token 2049 conference there pulled in 15,000 people. They called it the world's largest crypto event. That's a lot of people.
It really is, 15,000. It just shows you how huge and connected this global crypto scene is now. Hard to even picture that scale.
Yeah.
And having big names there, like Binance's founder, CZ, Changpeng Zhao, or Justin Sun from Tron, it just underlines that Dubai is becoming the place to meet, make deals, talk about what's next in crypto.
And the buzz wasn't just networking, right? Talk about deregulation, new deals. Even saw that allies of Trump were promoting a stablecoin there.
World Liberty's USD1, I think.
Dubai is definitely rolling out the red carpet tax breaks, supportive rules. What does this tell us about where crypto innovation is clustering geographically?
Well, Dubai's clearly making a play. It shows this growing competition between cities and regions to be the next big crypto hub.
Right.
Their focus on less regulation, creating this really supportive environment, it's a clear strategy to pull in talent investment, positions the Middle East as a major center of influence.
But does that focus maybe pose risks? Like attracting money might be prioritized over, say, protecting consumers?
That's a really crucial question to ask, yeah.
Okay.
Is the priority growth at all costs, or is there robust protection built in? That's something to watch.
Okay, shifting tone quite a bit here to something pretty concerning out of France. Police are looking into kidnappings targeting crypto folks.
Yes, that's a really worrying trend.
It sounds like it's escalating.
It does. The details from that recent case in Paris, a man held for days, the horrific detail about a severed finger, it's awful. And the fact it's not the first time in France or elsewhere in Western Europe.
Yeah.
It really shines a harsh light on the security risks if you hold a lot of crypto, a darker side to all this growth.
Makes you think, doesn't it? Crypto being digital, often outside the usual banking system, maybe that makes people with large holdings stand out as targets.
Precisely. Unlike money in a bank, securing crypto often falls entirely on the individual. These terrible incidents just hammer home how vital security is, not just digital security, like protecting your keys, but personal safety too.
Yeah.
Awareness.
Yeah, absolutely. Okay, back in the U.S., another kind of negative side effect, crypto mining noise. Apparently, it's causing real problems, health concerns even, in some communities, especially Texas.
Right. It's one of those unintended consequences, isn't it?
How so?
Well, maybe policies were initially set up to encourage mining, attract that business, but now these huge operations are running 204/7, making constant loud noise.
Yeah.
And it's seriously impacting residents, messing with sleep, causing stress. It's a real social cost that maybe wasn't fully factored in alongside the economic hopes.
Beyond just the noise, right? There's the huge electricity draw, the environmental questions about energy sources.
Exactly. That adds another layer. So how do these environmental and social costs weigh against the benefits? It really forces a conversation about the long-term sustainability of certain mining methods and, frankly, how the public sees crypto overall.
It's definitely part of the equation. Okay,
Great.
looking at the markets, May 2025 is shaping up to be potentially volatile. There are some massive token unlocks scheduled, over $4.4 billion worth.
Yeah, that's a significant figure.
Can you quickly break down what a token unlock is for anyone listening who might not know?
Sure. So basically, projects often lock up a certain amount of their tokens for early investors, the team, etc. And unlock is when those restrictions expire and those tokens can suddenly be sold on the open market.
Like stock options vesting for employees.
Kind of similar, yeah. Suddenly, there's a big potential increase in the supply of tokens available to trade.
And projects like Aptos, Arbitrum, Athena, Starknet are involved this time.
That's right. And when you have unlocks of this scale, billions of dollars worth, it can definitely shake things up. More activity, potentially more price swings, volatility.
So more supply hitting the market could push prices down if there isn't enough new demand to soak it up.
That's the risk, yes. So if you are involved in these projects or similar ones, you really need to be aware of these unlock schedules.
Something to keep an eye on.
Absolutely. It could mean trading opportunities, but also risks. It depends on how the market reacts.
Okay, on a more positive note for one company, Ripple. They've got a license in Dubai now to handle crypto payments.
Yes, that's a significant win for them.
Seems like a key part of their global push, right?
Absolutely. Getting licensed in a major growing hub like Dubai is huge for Ripple's goal of using crypto for cross-border payments.
Yeah.
It also helps them argue for regulatory clarity elsewhere.
And again, it reinforces Dubai's ambitions, doesn't it?
Exactly. Ripple setting up shop there fits perfectly with Dubai's strategy. It attracts more innovative companies, and for Ripple, it potentially helps make crypto payments more, well, practical and widely used globally.
Now here's a partnership that caught my eye. Sony and Line. Big tech names, right?
Sure.
They're teaming up to build a blockchain called Sonium.
Yeah, that is interesting.
What do you think it means when established giants like these jump into building their own blockchains? What could come out of that?
Well, it shows that big tech sees potential in blockchain way beyond just crypto coins. Sony and Line, they have huge user bases, expertise in everything from gaming and movies to messaging.
Right.
So a collaboration like this could lead to some really cool practical uses for blockchain. Think about managing digital rights for music or movies, maybe secure messaging, new kinds of interactive entertainment.
So blockchain woven into things we use every day, potentially, moving beyond just finance.
Exactly. It suggests blockchain might be maturing, becoming a foundational technology for lots of digital stuff, driven by companies with massive reach. Could really push mainstream adoption.
Okay, staying on the regulatory front.
Yeah.
News that The Trump administration is reportedly looking at lifting some crypto banking restrictions.
Yes, hearing whispers about that.
That could be another major shift. If they ease those rules, how might that change things for crypto's place in the traditional financial world?
Well, the stated aim seems to be boosting innovation, letting the sector grow. If they make it easier for traditional banks to handle crypto,
Yeah.
then you could see more banks offering crypto services,
Yeah.
buying, selling, custody, maybe. It could make crypto much more accessible for the average person.
So you might be able to deal with crypto through your regular bank, not needing a separate crypto exchange necessarily.
Potentially, yeah. It could really bridge the gap between crypto and traditional finance, increase liquidity, maybe normalize digital assets more.
Makes sense.
But of course, anytime you loosen regulations, you also have to ask about, protecting consumers, making sure there's still enough oversight to handle the risks. That's always the balancing act.
Right. Okay, last piece of news. EOS, a blockchain platform that's been around a while. They're rebranding as Vaulta and focusing on Web3 banking.
Mm-hmm. A strategic pivot.
What does Web3 banking really mean in this context, and what does this shift tell us?
So Web3 banking generally means financial services built on blockchain, aiming for more decentralization, user control, transparency, that sort of thing.
Okay.
For EOs, rebranding to Vaulta and focusing on this suggests they see a big opportunity in decentralized finance, or DeFi. It shows how even established players in the blockchain world feel the need to adapt, to chase these newer trends like Web3 to stay relevant. It's a sign of where they think the future's heading, more decentralized finance.
Wow, okay. So we've covered a lot. Bitcoin looking more like digital gold, regulatory changes making places like New York and Dubai key centers, but also serious security risks like those kidnappings.
Right, and the mining side effects, the big token unlocks coming, major companies like Ripple, Sony, line-making moves.
Potential shifts in U.S. banking rules, and platforms like EOS repositioning themselves for Web3. It's definitely a sector that doesn't stand still.
Not at all. These stories together, they give you a really good snapshot, don't they? A dynamic industry finding its way, facing big opportunities, but also real challenges as it tries to become more, well, mainstream.
And think about how these things connect, right? Bitcoin's perceived stability might attract the institutions, but they likely won't jump in without regulatory shifts like we're seeing in New York.
Exactly. And Dubai's push creates opportunities, but also puts pressure on other regions to compete or regulate differently. It's all interconnected.
So for you listening, how do these developments fit into your view of things? Does Bitcoin's strength change how you see it? Are regulatory moves making you more or less confident? It's a complex picture. What new questions does this raise for you as finance and tech keep merging in this space? Lots to think about.